Okay, Rigby, one issue that has received a large amount of media attention in recent times is the small business and general business tax break. Can you give us an explanation to how this works, please?
This tax break was announced by the government in response to the global economic crisis and was an endeavour by them to promote investment by small business. Obviously then it's only available to small business.
Yes.
The legislation for the tax break is framed around the depreciation provisions and accordingly is based on the investment on new plant and equipment that exceeds various thresholds. Generally speaking, for a taxpayer with a turnover of under $2 million, the tax break is 50% of the amount invested. For a business with a turnover exceeding $2 million, the tax break is 30% of the amount invested. It wouldn't be available to a salary and wage earner who purchases a new computer worth $2,500. They would be able to claim depreciation on that, but they wouldn't receive this particular tax break.
Rigby, are you recommending your clients take advantage of this tax break?
Dan, it really depends on the individual's client's circumstances. I certainly don't recommend client making investment purely for tax reasons. That is, I really think it has to be a sound investment decision primarily, but this tax break can make that a lot more favourable at the end of the day. We have a lot of clients who are justifying or endeavouring to justify the purchase of new motor vehicles and the like on the basis that they will be entitled to this tax break. As you're aware, motor vehicles don't appreciate in value, they will depreciate over in time, so justifying this sort of investment based solely on the tax break probably isn't a sound decision.
Rigby, can you give us an example of how this tax break works, please?
Let's talk about a small business tax break at this point in time. If a small business taxpayer was to lay $10,000 on a piece of plant and equipment prior to 30 June 2009, they would get a tax break of 50%, which is an extra deduction for 50% of that cost in their 2009 tax return, so a $5,000 tax deduction. We've had a few clients who have had the misconception that they would actually receive a refund for the tax break, but no, it's just an additional tax deduction. So if you outlay $5,000, you get a tax deduction. Sorry, if you outlay $10,000, you get a tax deduction for $5,000. You certainly don't get a refund of $5,000 from the taxation office. So what that $5,000 tax deduction is worth to you is really dependent on your individual marginal tax rate or your corporate tax rate, however your business is structured as such. So if you're paying tax at the marginal rate of 15 cents on the dollar, then a $5,000 tax deduction would save you $750 in income tax.
I want to try to give a couple of real-world examples now. You've been advising me on a new business I'm opening, which is an indoor play centre, and let's say our equipment that we're purchasing is worth $100,000. Could you tell us how the new tax break is going to work into our situation, please?
As long as your business had a turnover less than $2 million, you'd receive a tax break of 50% of your investment of $100,000, which would be $50,000. The one point you might want to remember though is that because this tax break is framed around the depreciation provisions, you're entitled to the tax break in the year in which the plant and equipment is installed ready for use or first used. Irrespective of when you pay for the item of plant and equipment, it needs to be installed ready for use before you're entitled to make the claim. And so I guess a lot of people who might be considering rushing out and buying something now, that would be something they would need to consider. So unless you're buying a motor vehicle off the lot, if it needs to be delivered, there's a chance that won't be delivered until the following financial year.
Are there any other points that you would like to make in relation to this tax break?
I think there's a lot of misconception, particularly with my clients initially, that they were of the understanding if they made an investment of $10,000 for instance, that they would the tax break would mean that they'd get back 50% of the actual outlay. So if they spent $10,000 they would be receiving back $5,000, which certainly isn't the case. It's simply a tax deduction. So the tax benefit really depends on the individual's or the taxpayer's marginal tax rate. One other point I will make is that this concession is available up until the 31st of December 2009. So another issue I guess taxpayers could be considering is which year they would like to have the concession apply.
Okay.
That is, if you've had a booming 2009 financial year, you might want the tax deduction in this financial year.
Yes.
If you've had a slow year and you're likely to have a better year in the 2010 year, you might be better off delaying the investment until the 2010 year and claiming the tax break in that year.
Rigby, I've also been hearing a lot about the new education expense tax offset. Can you give us a brief rundown on how this tax concession is calculated, please?
This concession is just basically based on 50% of the eligible expenditure up to various limits. If you have a secondary school student, that limit is $1,500. Primary school students, it's $750. So essentially, if you were to go out and outlay $1,500 on eligible expenditure prior to 30 June 2009, you would be eligible to a refund of $750.
Okay, is that a tax offset, or is that just, again, according to your marginal tax rate?
No, it's actually a tax refund.
Okay.
So irrespective of your marginal tax rates, if you outlay $1,500, you'll get your $750 refund irrespective of your tax rate.
Okay, and that's in relation to if your child needs a computer, for example, and you have to go out and buy that, you're able to claim that as a tax. That's
exactly right. There are 3 criteria that you are entitled to: Family Tax Benefit Part A, the student is eligible, and also there's eligible expenditure. And as you say, that a purchase of a computer would qualify, but there's a lot of expenses that relate to the bringing up of your children that don't qualify.
Okay.
Things like student fees, sporting equipment, uniforms, things like that don't qualify, whereas your textbooks and tutoring and computer expenses, internet expenses do qualify. So you really should check to your tax agent before you sort of consider making these outlays in the last couple of days anyway.
Thanks, Rigby, that was great. I hope you enjoyed the presentation. Rigby will be online on my forum on Monday night, June 29 at 6:30 p.m. Go to www.myonlinewealthcoach.com.au to the news and tabs events to register, and he'll be able to answer any queries that you have. My Online Wealth Coach is completely unique in the financial services field, where we do not sell products or receive commissions. We only educate and motivate clients. We're a financial advisory firm that specialises in business and personal coaching. For more information, go to www.myonlinewealthcoach.com.au.